Okay, fellow traders, we back again. Still a little bit under the weather, so please do excuse my voice. First things first, highlight. You want to make sure your chart is set to New York time. Once you've done that, you want to add a line at 12 midnight for the beginning of the day's trading. And secondly, you want to add another line at 7 a.m. Everything on the left-hand side of 7 a.m. becomes your London session. In your London session, you want to highlight your high and your low, and you want to highlight any fair value gaps or any breakers that stick out. So how are you going to find those breakers and fair value gaps? It's always good to look at your 15-minute chart. If you know what's a fair value gap, that's it right there, and that's a bearish fair value gap. And then this is an order block. Why have I highlighted this order block? I'll explain to you. So the reason why I love to trade in the New York session is because London session gives me a bias without looking for much. But if you always want to be sure, the quickest way to check for your bias, if you've been following along, I'm always saying highlight your old highs, old lows, previous day highs and previous day lows, and if it hasn't been hit, keep drawing it into the future. Reason being, Friday we swept 3 previous old highs and immediately created a break in market structure, which lets me know that we are currently bearish. Going into Monday's trading, I already know that. But then, so we are bearish until when? We are bearish until we sweep a liquidity low, or yes, a liquidity low, which can be a London session low or a previous day low. So until that happens, or we go into an old fair value gap, or we go into an old breaker, if you get an idea, if you get the idea that I'm trying to paint. So these are different liquidity points that I've just highlighted out. But for now, showing you the possible trades that you could have been in and how you could have entered. So in the London session, we created a break here. Let me draw that out much more neatly. So very crude depiction. Otherwise, these videos are going to be too long. A very crude depiction. Oh man. So there's a high here, low. There's another high here, there's a low. There's a high, there's that low. So that's what I wanted to bring to your attention. And I was trying to skim over it, but I can't. You have to like really define it. And as I've said, the way I'm drawing it here, if you go on your 1 minute chart, you'll see it like that. So we created this breaker here, but we reclaimed it very quickly, kept on trading lower, and then we created another breaker here and kept on trading low until we created a London session low. Once that low was created, on the 15-minute chart, I highlighted this order block from the 5-minute breaker. Reason being, now I can anticipate that when price gets here, I can go short. When will I go short? I'm always saying, always use the breaker if you're starting out. So just highlight the break, and as soon as price touches the break, there's also a fair value gap there, so you could have entered on the fair value gap if you understand ICT's concepts, and if you've been through his concepts, his videos, you know that it's either you enter on your fair value gap or you enter on the break, but on the break of market structure, not break of support and all that other stuff. Cool. So price tapped in again here, and as I've said, it's either if you're entering on the break, and if the break is not too far from the high, it's either you can go in all at once or put your moves gradually. So I put one move there, it went in again, I put another move. And always we go for low-hanging fruit. And then what do? Then you manage your trade. So how do you manage your trade? You are waiting for it to show you some sign of a reversal at a point where we may anticipate bullish prices. This breaker here is highlighted. To be more specific, I could have done this here. It's this breaker here, but anyways, we have all these red candles, have that high, have a low, then we have a break in market structure. So it's an experience thing. I just like to highlight all the red candles so that I know around this area here, I must anticipate some kind of resistance where price will not want to just flow through it or create a reversal, which will be a bullish breaker. So if you're managing your trade, then you are waiting for price to create a reversal. So I've said this before, when price creates a low and then retraces, and then creates a low and retraces again, when it does it the second time or the third time, you want to take your profits and move out the way. Otherwise, you're gonna lose everything. We are scalping, we are day traders, so we're not aiming, for the lowest of lows. We're going for low hanging fruit, easy access, but you have to understand price action and how it works, and how the breakers, fair value gaps, all lows and all highs work together to kind of like ping pong price around. So we've swept the London low here, so you can anticipate some kind of bullish price action, and we did create that. Crude depiction, boom. The break, where's the break? And there's a break in market structure right there. So price makes a low, comes high, no break, makes a low, comes high, no break, makes a low, comes high, no break, makes a low, makes a high, no break, makes a low, takes out the high, that's a break. Highlight the break, short into the future, you have a trade. What are you aiming for? The session high. Simple as that, which is the London session high. Because as I've said before, on a Monday, there are two trades. And also on a Wednesday. There's always the first trade, which is like a Judas swing, but it's not really a Judas swing. I'm sorry for even saying that. Otherwise, I'm gonna confuse you. There's the first trade in the New York session, which is just going to sweep liquidity, and then there's the big trade. And those big trades form on a Monday and also on a Wednesday. With experience and time, just glossing over the charts, you will understand that. And obviously, when I'm holding on to a big trade, which is something that I don't like to do, but because I found this recurring thing, and that's what trading is, or that's what an edge is. It's understanding things or knowing to identify things that reoccur over and over and over. And as you see, these green blocks here, it's because I'm managing this trade. Woke up super early to see if it was still going in my direction, and it was. And what am I looking for? Why am I highlighting these fair value gaps? So if it's highlighted with a green ring around it, that helps me know that this is a fair value gap that was created when price was being bullish. So every time it comes down into that fair value gap, I want to see it do what? I want to see it create a bullish kind of pattern over and over. Anytime we come down there, I want to see it. And if it keeps doing that there, that's how I know to stay in the trade. That's how you babysit a trade. Well, that's how I do it. Like, it works for me, and I think it's, yeah. So I'm aiming for here. Unless something happens, it's always good to take your profits just on the candle's high right there. Instead of going for the high, go for the bodies of the candle. But again, this is all up to you and your skills of reading price action, which is very important. Hence why I say backtesting is so essential, man. You get so good at reading these things if you really do backtest and pay attention to what you're backtesting. You're not just backtesting and make a shitload of notes. Yeah. So yeah, that's that from me for today, and have a good one.